quick introduction to what the Grail Edge is. It's just like I said in my previous video, it's just where we sit down because obviously everyone in this place is basically sitting down from their own aims, that kind of a thing. So we want traders to be uh conversing about their journey, their mistakes, and what actually helped them become consistent in their journey, that kind of a thing. So
Yeah,
as we have that was the reason why I decided to like invite you to like be our first guest because this is actually the first episode for this our podcast, that kind of a thing. So I would like you to like give us a quick introduction about yourself and how when you start edge trading and all that.
okay. Firstly, thank you for the opportunity to be here. It's of great pleasure. You understand? So, I'm JPY Doctors, and I'm a forex trader, full time forex trader, and I've been on this game for let's just say since June 2023. Started forex June 2023. The trading as a whole, I started in 2022 November, November December period. So yeah, and yeah, that is it. That's for the introduction aspect.
So
Yeah.
when you started trading, like who introduced it to you? Was it like a friend or that kind of a thing? How did you come across with it?
As for trading, I would say nobody invited me to trading. Nobody invited me to trading. That's why till date I can say I don't have a role model because how I found trading was just I was there's this stuff, Zenda and Android phone. I just finished my WAEC, SS3 WAEC then. I know this advertisement that put then I just saw Octa FX and I was like, wow, what is this stuff? Thing was just going down and going up and all this kind of stuff. So I was curious to know what it really is as a then. So I dived into it. I dived into it with out of that curiosity, and yeah, I was just looking for a way to channel my, let's say, joblessness and I would say negative energy because as at then, a lot of things happened to me. I lost my dad and kind of shit. So I was like, okay, let me find a way to convert this so-called energy to keep myself busy and convert it to a positive one that actually yield results. So that's how I came to trading. So and yes, I think I paid my first mentor then. I paid uh how much was it then? I think whether it's not 15K. Yeah, that's how my trading journey started. At first, that one was crypto there, trading there. And fast forward to 2023 June, that's when I started Forex fully, as I paid another mentorship fee again to another person during that May period. So yeah, nobody really invited me to trading. I just found it myself. I would say it came to me.
Yeah, so like that time you paid for mentorship, was it like, there's this thing that is occurring in this our space when someone tends to rally up students and then collect money and then feed them weird information that doesn't actually give them money or bring them money. You actually experience such a thing during your own case when you paid for mentorship.
Yes, I experienced something like that. That is my first mentorship. The first mentorship I paid for that is during that December period. Yeah, I almost want to mention the person name for some reasons, but I would say as at then, the person is a very popular person in this FS space. As at then, he was, how would I put it? He was just like the blind lady, the blind. You understand? Something like that. But throughout my forest journey, I didn't have anybody that I would send chats to, like, help me answer this or help me mark this out or what do you do, stuff like that. I didn't get that direct guidance. All I used was the materials I dropped on on the on the group. And yes, the first mentorship I actually paid for, he just dropped videos on it, just dropped videos, and I watched those videos, and still yet my trading was not, you know, the progress I wanted was not, when you are putting effort on the wrong information, your progress will be very, very slow. Because I also had another person who paid for another, and you know, he seemed to have gained more knowledge than me within the same period of time that we started the same mentorship class, just with different mentors. So from there, yeah. But I would say I didn't let that stop me. I didn't let that stop me. What I did was that immediately I found out that, oh, this kind of person is just an affiliate marketer. He's just here for the mentorship fee. Because I think we're like almost 100 or something plus. I calculate the money around then. As I 2022 is big money, you know. So I didn't let that stop me. I went out and paid that my guy that started from another mentor. He gave me some videos, some information on like normal structure. I went to YouTube, you know, I started collecting data from different places, and I actually turned out to be among the first, I would say, out of 200 in that group as at then. We started 2022 December. I would say within January, February 2023, I would say I was among the top 20 or top 15 best, mentees then as at that time. Despite the him not, actually holding us directly, coaching us directly. So yeah,
That's really nice, though. That's really nice. I mean, some people tends to open this academy. They are not actually profitable, right? Because someone will be like, I don't have money to feed to the market, and then that person will just open an academy and start feeding people wrong information. This we make people to feel like forex is scam and all that, but at the end of the day, forex is not actually scam, right? It's all about concept and all that. But during that time, what was the concept that the person was actually teaching you guys?
the strategy the person was trading at then was supply and demand. Supply and demand. So that supply and demand was, how would I put it? He he emphasized mainly on the zones, but he didn't give us, supply and demand, they are everywhere in the market, but he was not really specific on the right one to choose. All he just did was mark here, set position to here, and yeah, that is all I could even remember because I can't remember him dropping lots of video on itself. You understand? So yeah, and that stuff affected me very, very well.
What was your phases like during your trading journey?
Oh, during my trading journey, well, from 2020, like I said, I would say I started trading fully like 2023 June when I paid for my second mentorship, and that one was even more better and more detailed than the first one. So I would say I knew forex was something that would give me money, but there's one thing I always bear in mind, when it comes to making money in this life is that nothing comes easy, and the moment you start rushing to look for it, it's eventually run away from you. Like there's a popular saying that goes, it said, you don't chase money, you chase excellence. You understand? When you chase money is a byproduct of excellence. When you are good in what you are doing, money comes automatically. You understand? So that mentality, I've already put it in my head. And funny enough, the way there's a way I saw this forex, I got paid though. I got paid, but I never for once thought that, it's going to get me rich quick. But I knew with time my losses would be reducing, you know. Yes, that's what I would say.
When someone enters the market, in the majority of people tends to have that mindset. But the right way, like, as you said, it is to be chasing excellence instead of chasing the money aspect and all that. But when a beginner comes into the market, they have this mindset of I want to get rich, right? So and these things tend to like hinders their emotion because when you want to get rich quick, you will lack your sense of risk management and your sense of everything have to be now, right? So, in that aspect, when it comes to this risk management, what do you like? What do you think about it? Let's say someone wants to like you trade prop firm, right?
Yes, I trade prop firm. Yes, I trade
So
prop
in
firm.
that aspect now, what's your approach? How do you think that how someone can actually pass their own prop firm, that kind of a thing?
Oh, okay. When it comes to prop firm and eliminating the mindset of not getting rich quick, right? Is
Yeah,
that
yeah,
what you're,
yeah,
you're thinking to
yeah.
do? Okay. So you see, one thing about eliminating that get rich quick mindset is that I would say the you have to. It all boils down to psychology. It all boils down to psychology, and you have to come to peace with the more you do the right things, the more you work well, the faster your winning days will come. You understand? But let's say those days will not just come once, like boah, just by surprise. No, you have to prepare for it. That's how I would say that you can eliminate that get rich quick mentality. Everything is a progress, and the more you work, the faster your faster your suffering span shrinks. You understand? So as for prop firm, exactly that same mentality, some people put it into trading prop firms. Prop firm, one thing, there's a psychology. Prop firm has his own psychology on his own. That's what I would say. Prop firm has his own psychology. Psychology in the sense that I can have a life account. I can have a life account. I'll be like, okay, $100 account. Another thing, yes, risk management. Let me just talk on risk management. The fastest way to, I'm not say fastest, the most ideal way or most professional way to actually pass or fail a prop firm or any account, right, is by splitting that account into 10. Understand? It's by splitting accounts into 10. With that alone, you have, if you fail that prop firm, you have that reality that, oh, this time it's my strategy. I have to fix it. You understand? I have to fix it. But if you pass that account, you know that, oh, okay, uh it's winning, or you understand, I'm trying, I'm getting better. Maybe, and with that alone, right, with you splitting that account into 10, you can be able to do something. You can be able to, like, you know your reality as a trader. Most people don't know their reality as a trader. You understand? That's why that get rich quick scheme gets into their head. They don't know their reality as a trader, in the sense that maybe they just get an account, right? 10% drawdown. Every trade they take, they will be inconsistent with that risk. Maybe today they reach $30, tomorrow they reach 50, the next tomorrow they reach 40. You understand? They are risking based on their emotions, and that is very, very wrong. You understand? The emotions can get in, it can be in your head, but don't let it be in your hands, because once you start clicking that buy and sell order, there is no going back. You understand? So I would say the right way to actually approach a profit is about one, know your win rates. And you can never know your win rates without you splitting your account into 10. If you take 10 straight losses with you following your strategy and all of that, you know definitely there's a bug in that strategy and you need to fix it. You understand? So everything, it all boils down to splitting your account into 10. And you get to fail faster, and you get to fix up faster. Yeah, so that is just the psychology behind prop firms. You don't rush to, and whenever you're in drawdown, you don't rush out. Don't ever rush out of drawdown.
Okay. You said something about work, like when you put in the work. I have a few things I want to ask. Number one is, when you say put in the work, what is actually that work, right? Because everyone is like, I'm a trader, I'm locked in, but what is that locked in? Because people tend to think that locking in trade is pressing buttons, that kind of a thing, which actually, I myself, I don't know what it is. So I would like for you to emphasize a little on that work. And when you said something about 10 trades, having split your accounts into 10, does it mean that you have to take that 10 trades, or is it like splitting it to 10 trading days, or can you like take into that 10, you can take like two in a day, three the next day, one next day, that kind of a thing?
That is a very good question. That's a very good question. So the first question you said, work, what is actually putting in the work rightly? There's one thing I love about trading is the fact that uh you can still do the right thing. No, you can do the wrong thing and it will be working. You can do the wrong thing three times and it will work that three times out of 10. The remaining seven that you go and try again, doing that thing that worked for you the three times, it will fail. You understand? So you'll not be like, oh, what's this? What's this? One thing about training is that work, I'll put it as observation, and noting down. Okay, let me put it this way. Me, there's a what we call peer research. There's what we call peer research. Before I started saying, okay, you have to understand that all pair does not move the same way. All pair doesn't move the same way. You understand? So you have to select a list of pairs. Then inside that list of pairs, you do pair research on maybe you select like 7 to 10 pairs, right? Then you select four. Maybe you're backtracking on all of them. I will recommend front testing. I would recommend for testing for pair research, you understand? So that I actually get to see how the pair moves and your emotions, you know how to manage it alongside. So you can forward test with a demo or you can fund small cent accounts for that. You understand? So that is part of some of the work. Then let's say another aspect of work again is that uh knowing your strategy, knowing when to exit, knowing when to enter, and the time frame as well that you use with the strategy. You understand? The time frame, okay, sometimes maybe if you notice, that's why I said observation. If you listen attentively to what I'm saying, you notice I use one, you observe I use one word, which is notice, notice, notice. Yes. When you notice maybe price is bouncing off a zone, it touched on that zone. Maybe it's bouncing off demand. It's coming down. It's coming, yes, it's coming up to supply. Sorry, bounce off demand, coming up to supply. Then that supply retraced price downwards again. Maybe it was bouncing off a H4 demand, right? Then that demand now it touches a H1 supply. Normally, if price is coming out from a H4 demand, the closest H1 supply, it's automatic. It's supposed to read it. It's supposed to read it. You understand? But this observation, you are going to split that observation into what? 10 or 5. I will say 10. Then again, I'm using the 10 rule. You understand? So that you can know if you say fast, you prepare fast. So now the first scenario one, which or trading day one, right? Market touch, maybe it's on GBP USD, market touch that sell 1 hour sell order block, which is supply zone, and straight immediately went down to hit the H4 demand zone stop loss. You understand? You will note it down as one. Okay, this is why it happened, or it happened this way. Just screenshot it and keep it down. Day two, you see that same thing happened. Then three, day three, maybe this time, from that H4, market took out uh, the H1 supply this time. Scenario 4, market took out from H4, the closest H1, market took it out. Scenario 5, the same thing. So maybe all your data all together, you now notice that 7 out of 10, right? Markets, enter market from the H4 demand, the closest H1 supply, it actually takes it out. Then the remaining three, you just know that, okay, it's just market being itself. You have to give yourself room for error. It's not every stop loss. You check the reason behind it. You understand? And doing researches like this will enable you to know the kind of stop loss you need to check the reason behind it. You understand? Maybe normally. And yes, another angle is to understand that market is not static. Market is what? Market is dynamic, meaning price action change. It's not always the same way we see it. It changes. I don't know when it changed, but the moment you see, how do you know what changed? For example, remember I said that 7 out of 10 the H4 demand takes out the H closest H1 supply around. Maybe this time you notice that, how do you know that market price action has changed or market algorithm has changed? Maybe this time, uh, 7 out of 10 take it out, but this time 5 out of these 10 times it didn't, and 5 out of these 10 times it took it out. So meaning five, it worked 5 times. That means it didn't raid the supply 5 times and it raided the supply 5 times. You understand? That's how you notice that, oh, okay, price action has actually changed. But sometimes when the price action change, you will now either increase ROR or you'll be like, let me use confirmation entry. You understand? So, and then again, you can still check whether it's still from your own fault. Because sometimes that demand zone that you are using, you might not mark it accurately as you marked it before. You understand? So you try to check what missed when it was working, and when it's not working again, now check what is still missing. I don't know if you understand what I'm trying to say. So that is some of the work you have to put as a forex trader. You understand? You understand what I'm trying to say, right?
Yeah, 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 yeah.
Yes. As for the other aspect, which is the risk management of you splitting your account into 10, it's not trading days. It's not trading days. You can say maybe a day, me a day, but I give myself three chances to trade. Yes, a three, that means right, if I eat three straight losses, right, I will just stop trading for that day. Yeah, so I just stop trading for that day. But I hardly see three trades in a day. It barely happens. It barely happens. But I can say I can see two. I can see two a day because why? I make use of HTF, the confirmation entry, and all of that. And it don't just form anyhow. You understand? So except I want to just scalp, but my main entry is hard. So what you will do is when you're splitting the account into 10, maybe your problem is a $5,000 account, and they say Jordan is 10%, it's $500. $500 is $50 per trade. 10 straight stop loss, that account is gone. Straight stop loss, so that account is gone. And now you take your first trade, maybe you saw your strategy, take your first trade, you hit stop loss. That same day, you saw as far as it aligns with your strategy, take the trade again. This it might give you 3 arrow, 4 arrow, whatever. And always know when to break even and when not to. You understand? So that is just it. That's what I can say. It doesn't matter minimum the trading days. It can be, you can take three trades a day and we hit take profits. You can take three trades a day, we hit stop loss, one we hit take profit. It goes like that. So all you just have to focus on is whether you follow your rules or not. Just follow your rules. That is just it. From there, you will either know whether your strategy is trash or whether it's actually working well. It's over time, you will know. You understand? So yeah, that is it.
So, for instance, now I took a trade and then I got stopped out that day, and then in a row, that kind of a thing. If like, have you like been in that same scenario whereby you take a trade and then you lost, and then you take another trade, like being in losing streak, and how do you cope with it? Maybe emotionally, that kind of a thing, because when beginners tends to hit their first SL, hit their second SL, sometimes they tend to lose control, right? So how are you able to identify if you are low-key losing control and if you are low-key trying to break your rules, which I believe you trade with rules. So how do you work with that?
Okay. Uh, as for trading, drawdown, there's this psychology that comes with drawdown. Fear. The fear must be there, whether you are experienced or not. You understand? It will be there. You'll be like, oh, I'll see this account now again. I'll see this account now again. The thing is that you can have all those talks in your head, but You see, don't allow it come to your fingertips where you press the buy or sell. Don't just allow it get there. You understand? So the thing is two in this kind of situation when I draw down, it's two ways you do it. You know, when I said split your account into 10, you give yourself clarity whether you are failing or you are winning. Okay. So the thing is, there was an account I was trading, right? I don't know if I still have the screenshot here with me. That account, I lost the first seven trades. The first seven. That is one, two, three, four. Four of that seven was caused by what? I broke my rule. Four of that seven, I broke my rule. So, but it was phase one. So there was no need for me to like half my risk. The reason why I said half my risk was that, for example, now, it's either you take the full, you continue with risk 1%, following your rules till you get to risk, till you fail or pass, or once you have taken five straight losses, when you take five straight losses, and that straight five losses, right? You notice that you did not follow your rule, like you, because we are not perfect. Sometimes we do break our rules and all of that. We are not machines. We get emotional sometimes, and we take. But if you see that you broke your rule and it cost you three losses out of that straight five that is the remaining two were caused by you following your rules and still eating stop loss. What you now do with the remaining five is that you give yourself 10 chances again with that five. How do you do this? You half your risk. Out of $500 risk, you've lost 250. The remaining 250, you start risking $25 risk. Initially, it was $50. Now risk $25 each, giving yourself 10 extra more chances. Out of that 10 extra more chances, there is this will I say safe space or this comfort it gives your brain, like a second chance thing. You understand? There's this thing that psychologically, the human brain is, how would I put it? You'll be like, just one more chance, one more chance. Then once you give it that one more chance, you see that your brain will start rewiring itself positively to be like, oh, you still have 10 more now. You still have, there's no way you can take 10 more chances now. But initially, when we were with the 10 straight trades and you lost five, that is when I left with five chances, risking $50. Your brain was like, more five trades, five trades. If you can lose five straight trades at the beginning, can't you lose five straight trades again? You understand? You start giving yourself that kind of doubt and what's kind of shit. But when you now split that remaining five chances you had before, you now half the risk again. This time you're now risking $25. Now gives you, after that 250, now give you 10 chances. Your brain will rewire itself again and start taking positively that you know if you lose 10 straight now, you can't lose 10 straight now. If you follow your rule, you know fully well if you follow your rules, you cannot lose 10 straight. And yourself, you will agree because you know fully well that yes, if I do, it will work. And you have your risk. When you are a Jordan, your main aim is to risk accordingly and till you get out of the drawdown. Then once you are out of the drawdown, then you cannot continue with your original risk, which is that $50. You understand? You now keep going till you pass the account. So, but when I took the seven straight losses on my account, I did not have my risk. Why? Because I mean it was phase one. Assuming it was funded account, I would have halved my risk. Okay, this is phase one. I know fully well that as far as I've taken three straight losses from following my strategy alone, and the remaining two, it was from my mistake. I know if I follow my strategy, my rules perfectly, the next two trades, one or the two must be straight wins. Guess what? I took the next two trades. The two trades were straight wins. 4 arrow, 8 arrow, direct 8 arrow. That is five times $400. That is, I recover from my drawdown, add extra. I think I lost three something, right? I had extra 2% on top, which is my balance went back to $5,000 with extra.
So how do you like place your targets?
Uh,
Do you like have
but
specific target like um fixed RR, for instance, every trade must be 3R, or is it like some trade can be three, some trade can be four, some trade can be seven, etc. So how do you fix your risk to reward ratio.
O- okay. Like how did I pass the account after recovering from the drawdown? You know,
I
I would
like
say,
if, even what am I like generally like some people tends to be like even though this trade we eventually hit, let's say 7R, out of that 7R, I'm only going to be targeting 3, right? So some people will
oh,
be like, okay, I
oh,
will hold till the 7. So my question is, do you like have fixed risk to reward ratio, fixed target, or are you flexible with your risks and I mean your targets?
oh, okay. I will always choose to go with fixed arrow, 4 arrow. Most of my accounts I trade, both yes, most of my accounts I trade. If you see me target 7 arrow, 10 arrow, it's on rare occasions, and you just know maybe I just want to let the account run. But normally, what I advise is have a fixed arrow. With a fixed arrow of 4 or 3 arrow, you know, you someone who is waiting for 7 arrow, 10 arrow. You understand, with a very tight stop loss. The thing is, I use my stop loss is not tight. If you see me use stop loss, depending on the zone, you understand, but my stop loss does not exceed pips. It does not exceed 30 pips. And over time, the accounts I started trading since January, February, March. Okay, March. We just targeting 4 to 3 arrow. I've withdrawn like over, it's a lot, like 5 figures. Yes. So not top of Naira account alone. Naira account alone is a lot on there too. We just how many risk? We just let's just say risking 8,000 naira. 8,000 naira per trade. 8,000 naira per trade. You know, without even 3 accounts. I started those accounts since January, February, March. Since March, under 1 month. You see. So the thing is, you just have to fixed arrow, right? Gives you these professional results. Professional results. You are not the one that owns the market. I see people target 10 arrows. If you out of 100 traders that are in existence, I would say the one that catch 10 arrows twice or 3 times a week, they are not up to 20. You understand? And especially when market conditions this period is very, very harsh and manipulative. So I'll say the safest way to pass an account is to have a fixed arrow, 4 arrow. Just target it and go. That is just it. You will notice that you will have a very healthy psychology and prevent all these market run 5 hour come back to entry stuff like that. It fucks up your psychology. So yeah, fixed arrow for me. Fixed arrow for me.
Okay, that's really nice terminology or train you on how to pass your profile account, hitting rigs into 10 and then building them one by one. So
Yeah.
if there is something like message that you or is there any common mistake that you see newbies making, and what is your advice to them for them to like avoid making such mistake? You scroll on social media, you tend to see some newbie mistake or even all these idolos. They have their own mistake they might be doing because truth be told, some of these idols might not be like all that profitable. So what are maybe common mistake you tend to see, and how do you think or what's your advice to them to like ratify it before it's too late?
Yeah, the mistake I see most of them do, especially this newbies, is the fact that it's a lot though, but I will try to, make it, simpler. These newbies, I see they focus on to perfect sniper entry. I need to have the smallest stop loss, the most highest arrow. They are more glued to like perfection rather than making money. You understand? And what the major cause of this stuff is that most of them they go out there For example, now you might be a mentor, you enroll students, and these students they go to Twitter and see idolos flipping, some dropping fake PNL, some dropping real ones, but some will flip, let's say $100 to $1,000, $2,000, and they will be carried away by that. And the next thing they will drop an entry model. They'll let the entry model. It works for like 2 3 months, and setbacks start kicking in. And meanwhile, they had a mentor who dropped videos for them, and they neglected it. So the thing is, our advice newbies to actually just choose one mentor, and make sure that mentor is the person is very very credible, with results, with evidence that, oh, this person actually withdrawing now, all kind of stuff. It might not even be necessarily be withdrawals. It can just be a group, a channel where the mentor drops signals, where he or she is just being transparent. That is actually how to know whether a person's system work. These newbies these days, they just pick entry mode and neglecting the system. First on QMRO. And before you can use entry mode of that QM, supply and demand, some of them will not be like, okay, since they were trading, normally they do trade. I don't know the new stuff that they bring out, which is KL, SLP. I don't really know. And yes, they should actually know how to filter noise. So going back again, let me not divert. These people, these newbies, they'll take an entry model and try to make it into a strategy. For example, now somebody like QMRO, that normally the mentor merges with supply and demand. They will not know that the mentor merges with supply and demand. All they will just do is carry they enter their trading view. They will not even care the time frame the market is on. They will just choose one random time frame and start using it like that. When it started working, they'll be happy. But they don't know this trading rewards nonsense, and it will allow you build the confidence over that nonsense. And over time, it will slap with reality. You understand? So yeah, and for the idolos too, for the idolos, right? I would Nobody is perfect, but you see the kind of mistakes those guys make is they don't follow up the students. You understand? They don't follow up the students, and they attract those students with flashy results. The flashy results, but be open to all of them. Try this and drop videos back to back. Might not be necessarily every day, but at least the topics you said you will teach all of them well. Understand? And make sure to again track their progress. That's what I mean. If I'm mentoring, I'm host public mentorship once in every 2 years. Early 2024 till now, all of them are doing good. All of them. I would say not all, most of them, sorry. Most are doing good because trading, a lot of people give up and stuff like that. So yeah, that is that for the new. Very, very careful. Yes, very hard. Trading is one hard stuff, and I know you're an OG, not guess, you're an OG in this space, and you should know the time of ICT and SM as are back then. Nowadays, how many you never hear anything ICT these days. No, I barely go on Twitter and see anybody ICT.
Yeah,
You
people tend
understand?
to be like
Like,
ICT is not that profitable again.
say you see. These days now, you barely hear ICT. You don't hear ICT again. And over time, just watch. Over time, you will hear CROT again. Just give it time. It will fade off. And another thing will come aside. But everything boils down to three things. It's either it boils down to support and resistance, either it boils down to price action, or it boils down to supply and demand. That's what I can say. Because no matter how you try to sweet talk a strategy, down to these basic three traditional uh, uh, trading trading techniques. For the greatest Japanese candle reader, I don't know that guy who wrote Candlestick Trader, for him to actually do it, you know that supply and demand, supply resistance, and price action actually works. So yeah.
Yeah, it feels like strategy tends to fade, that kind of a thing. But I think the issue is that people tend to like when a certain strategy tends to hit a certain losing streak, so they tends to abandon it because like most mentors tend to say they like this strategy is not 100%. This strategy do not have 100% win rate. right? Which means that you have losing days and you have winning days, that kind of a thing. So I think some people tends to, when they hit that losing days, they will abandon the strategy and then jump into another strategy, because when you tend to backtest ICT, right? ICT, if you backtest ICT, ICT tends to work, just that it's not every day, right? It's not every day. So
Yes, exactly.
yeah. Do you feel like whatever any model now that you are currently trading, that with time that model will fade, that kind of a thing? Because some people, well, I myself, I had this fear that someone won't say that around 2025 that ICT model will not be working again. That was around 2023. So that actually implanted something inside me, right? It wasn't, I was like in a hurry to keep up. So this actually conflicted my trading, because I was like trying to keep up with that fear that ICT won't be working around 2025, and then we are already in 2026. So do you like feel like some strategy with time will completely be useless?
Um, all strategies. I believe in trading. I would say, uh, some people believe everything work. As for me, yes, everything work, but some things work more than some things. The rate at which they work is different. You see, speaking of ICT going off, when some people say the ICT will go off, this is that. Every strategy has its own losing days. Every strategy has its own losing days. And you sticking with, for example, now, right? I've been trading supply and demand for 2 years now. And I've experienced every losing period it offers. If you experience 5 straight losses or 10 straight losses from supply and demand, you check the reason behind the 10 straight losses, because obviously there must be a reason. You check the reason and somehow you found it. You repair, you see that your win rate will increase. I would say for every losing day, you understand, every losing day you have on a strategy builds up your experience. The market is too smart and the market advances every time. It will not repeat. It barely. If you want to repeat, even though you want to repeat the same useless price action, you will be, that experience will save you. That's how I would say trading is experience and strategy. The more mistakes you make, the more stop loss you eat, the more losing streak you face actually gets you more stronger, and you will know how to navigate that strategy more perfectly. It will be like punishment, but actually they actually show you road. You understand? With time, you get better with this information, that series of information that you've gathered out of errors that you've made. You understand? So that's how to get better. There's people who are trading one strategy for straight 10 years. It happens. You cannot, your strategy cannot neglect directional bias and you expect it to work. Every strategy that you see, there's a reason higher time frame exists. You understand? They didn't just put it there for fancy. And if you notice, anybody that is complaining ICT doesn't work, check it. They barely take trades from the H4, or they barely look. If you look at most of them, 15 minutes, 5 minutes, 15 minutes, 5 minutes. Highest they'll go is 1 hour. You understand? So, and most of them, they neglect the basic structure, break of structure, swing highs, and all of that. They are focused on entry from imbalance, entry from inducement, trying to catch continuation without, you see, there's one thing about the market is that market is very, very smart, and you don't try to catch every move. Some people try to catch every move and with tighter stop loss, meaning they feel us go, they can just go like 5 minutes now, right? They will just, maybe they saw that market has been selling from the H4, they even better do proper analysis to know whether market is selling from the discount or whether market is selling from the premium, or buying from, sorry, buy whether market is buying from discount or selling from premium. They don't even care. You just put position to, as far as they break obstruction in 5 minutes, they set entry and market hit your stop loss.
It's
You
more
understand?
like they are too focused on the entry part, like entry model, instead of knowing the actual bias of the market. They are focused on entry, that kind of a thing.
Exactly, exactly. That is the thing. They are more focused. They are more focused on, you know, the entry models. There's one sweet thing about entry models. I don't know. They seem like juju. You can just wake up one morning. I be like you see an entry model, actually backtest it, and it will actually work. It will work that first month. It just be like the market has been now feeding you delusions, giving you fake confidence. When the thing stops working, you can just back straight 10 losses. And you will think that, oh, it's just market doing this thing. It's a lie. Oh. The ability to quickly spot your wrongs in trading is one key, uh is one, will I say, superpower. The ability for you to spot your wrongs easily, it's one great superpower you can have in trading. There are some people that will take four straight losses. Even me, there's a kind of straight five losses I would take. I'll be like, no, 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 there's something wrong. There's something wrong. And my duty is to not look for what is wrong. That's why it's more advisable to enter trading with a mentor. Because your mentor will do those jobs for you. And when you enter those trades, you can quickly go and assess your mentor and be like, sir, ma, look at what the person will be like, oh, this is what happened. And you check, you see that it actually worked. You understand? But people like us who are actually the mentors, that's why we spend times on the charts. Sometimes I can just be bored and be observing the charts and stuff like that. Although it has its downsides, though, but it's manageable. You can bear the downside. It's not a big deal that much. Just you can control it. And the downside is you'll be trading for fun.
Yeah, yeah, yeah. Well, that's a nice take, right? For the newbies out there, for them to focus mainly on one mentor, and the mentors, when someone subscribe for your mentorship, you have to like put them through thoroughly till that person, at least if that person is actually serious, but because in some cases, some people will just pay for mentorship and then they'll feel like to be calling you for classes whenever they feel like, right? So someone may decide
Yes,
to call you around 1 a.m.
yes.
for you to host class for him because he won't be having chance, inability to make out chance or like prioritize when you want to do this and when you want to do that, that kind of a thing. But that's actually a nice thing for, at least if the beginners out there hears this and sees this, they'll be like, okay, I should focus on one mentor, and the mentors as well should focus on their students and then deliver till they go, the students gets what they've paid for. So the thing is, I'm actually
Yes.
curious though, how do you like know your mentor? Like, how do you know that this is actually the guy that should like pull me through into all those things, that kind of a thing?
Okay. For that question is actually a very, very good question. And yes, you see, to actually choose a mentor, it means that person not only, there's a difference between mentorship and, let's say, classes. Mentorship is like the person sending you videos and also tracking your progress, and at the same time, you know, give you guidance and a lot of things to make sure you are on track. But classes, I can just drop video and give an assignment. I might never give assignment if I'll just leave it there. You understand? Now, the best person to actually teach you how to trade, if you're a beginner, look around your circle. That is for those who actually know people in the Web3 space. Look around you. You will definitely know one person who you know is good at this training stuff. Although that person might not have that, maybe the person have not made so much money from trading. Maybe the person has not made like 2 million. Maybe the person has made like 1 M. But you know that this person actually is experienced. And one thing I like about progress does not lie. It does not lie. We have say yes, yes. It does not lie. Evidence does not lie. So you will definitely see the person open maybe a signal group, free signal group, or you definitely see the person's chart. You can just request for the person's trade history, you know, something like that. You can just ask and be like, oh, okay, let me see your withdrawals, or let me see how you trade. something like that. That's if the person is close to you. Then you will see that the person is actually good. Pay that person. Because why? Why did I say pay that person? That person, he has not gotten that full audience yet that he will not have your time. Paying that kind of person will actually give you the person will teach you well, and the person will have your time like real good to have your time well. But if you go and carry your money to go and pay people who have like 100K followers and who have well, that's 500K followers on Twitter and have like
Mm.
okay, you can hear me now, Abi?
Yeah, 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 yeah.
Okay, okay. So now if you go and carry your money and go and pay somebody who has like 100 mentees, like the class, let me just say class 2026, you put 100 in that group. There's no way that person will have your time. No way. There's no way that person will have your time. You understand? Highest, if you notice those kind of people now, they will now open another group again after putting public mentorship. They now host another private mentorship, meaning one-on-one session. They will not make money off that one. And that private session, you might not be able to afford it. You can just slam a very ridiculous price on it, like $500 or $400. You will manage pay, we manage gather our savings, find way also money, they pay $30, which is almost like 50K. Now I can go to find where you want to see $500 or $200 pay for another mentorship. So that's why I said you have to find somebody who has your time. And how do you find somebody who has your time? Look around you. There must be one friend, one acquaintance, one, someone. But if you don't have someone around you, then another way is those people who has very, very high amount of followers. Someone having high amount of followers doesn't mean the person is not legit or the person, you can be an influencer and still know how to trade too. You understand? There are people who actually know how to trade. But how will you know them? Ensure they have a private, a public group where they do drop their setup. Observe the group from A to Z.
All right. So that's really a nice insight for majority of beginners, right? So this was actually a nice, eventful.
Let the there's the and stuff. I will not say my student, my friends, they have had a bad experience. The bad experiences are everywhere. But tech risk, before you hear bad experience about tech risk or Sierra or Oshmod, it's very hard. You understand? So yes, I would say the person having a good clean record and a group where the person just drop setups and buyers and all of that, you will know that person is actually profitable or knows what he or she is doing. So yeah, that is one secret to it.
So I really appreciate you making our time to advise, give us all this insightful advice, and
Yeah,
the other people that actually joined us, right? So I really appreciate it. So I guess that's what we do in Traders Edge, right? We tend to call out, people like JPY Doctor for them to give us advice, and then we can feed these to beginners traders so that they won't, I think we've passed that era where someone should be making mistakes, at least mistakes that should cost you 2 years. You can fish out information that can reduce the amount to maybe months um or even 1 year, that kind of thing. Because with the right information, you don't have to like be go through some pain and losses for 4 years before you become profitable. With the right information, you can do that for 2 to even 6 months or 8 months, as long as you actually lock.
yes.
Yeah, yeah, yeah. So that's really nice. And another last request will be JPY Doctor, when you said something about passing that 10 losses, that splitting your tradings to 10 and then taking them one by one. Maybe later in your free time you can maybe give us something like chart illustration later, then you can send to my DM, then I can work on it, that kind of a thing. Would that be possible?
Okay, okay. But I don't think that will be possible now, but
Yeah, yeah, later.
it will be possible before, yeah, later, yeah, I might just I'll communicate how we'll do it on your DM.
Yeah,
You
yeah, yeah.
understand? Yeah, but definitely going to be a video. It's going to be a video. So yes, it's definitely going to be video with this. So I don't know if it's going to be a session like this that's going to be recorded also, or I'll just do a normal video, like kind of a mentorship video
Yeah, yeah,
on
you
it.
can do
So
more like,
whichever,
yeah, yeah, yeah. So that's
so
true.
whichever I
That's true.
would
Yeah, yeah,
totally.
yeah. So guys, let's call it a day. Thank you for attending once again, and we wish to like have you guys in our next episode and all that so that we can gather together, learn and improve our knowledge because I believe all this time I myself have learned one or two, right? Like splitting my trading to 10, which I'm going to be doing, right? Because that wasn't my approach initially. What I
Yeah,
used to do, I tend to like I split mine into five actually, right? Though I mainly focus on buying funded account already, but I tend to like split into five, then I'll be risking it, right? It depends on, it depends on win rate. Everything depends on your win rate. I don't know if you get what I'm saying. So
yeah.
yeah, yeah. So thank you guys, and we hope to see you. I will communicate our next episode because we tend to like find people that actually
Yeah,
we
yeah.
don't choose people anyhow, so we choose like
I
people with
understand.
pure evidence. Yeah, 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 yeah. So I guess we'll call it a day for today. So stay paid.